This is the Recycling, Scrap Metal, Commodities, and Economic Report, January 6, 2025. U.S. weekly raw steel production was up slightly to 1.66 million tons, down 2.8% from last year, and down 2.5% year to date. This is on continued slow U.S. manufacturing. U.S. dollar index, which is the U.S. dollar versus other global currencies, rose to 108.9. Leaving out the COVID peak, it was the highest since 2012. The cause is the strong U.S. economy, which is keeping interest rates higher for longer. Note that the higher dollar puts downward pressure on commodity prices that are priced in U.S. dollars. WTI crude oil price rose to $73.96 a barrel despite the strong U.S. dollar. Cold weather in the U.S. and Europe drove demand, but Chinese bearish demand forecasts remain due to their strong EV sales. U.S. weekly crude oil production fell slightly to 13.57 million barrels per day, just off the recent all-time high in U.S. history. Future sanctions on Iranian oil could allow higher U.S. production without global prices coming down, which is good for oil company profits. The U.S. weekly oil rig count fell slightly at 482, despite the near-record production. There is huge U.S. production increase possibilities. The U.S. has about the 8th highest proven crude oil reserves in the world, but it's the #1 crude oil producer. Scrap steel #1 HMS composite price was steady at $303.33 a gross ton. There's no clear direction for January pricing despite slow demand. The strong U.S. dollar raises the net cost to other countries to buy U.S. exports. Hot rolled coil steel price rose to $35.40 a hundredweight, which is $7.08 a ton, despite continued slow demand. Copper price fell to $4.08 a pound on the strong U.S. dollar and weaker than expected Chinese economic data. Aluminum price fell to $1.13 a pound, which is $24.96 a metric ton on the same strong U.S. dollar and weak global manufacturing and weak construction. Chinese December's Caixin General Manufacturing Purchasing Managers Index fell to 50.5 from November's 5-month high. Factory activity grew, but output and new orders slowed. November's spike was due to pre-orders before possible U.S. tariffs on China goods. U.S. weekly home 30-year fixed rate mortgage rate rose to 6.97, the highest since July. The above average trend growth economy and 8 years of high government deficits together are causing higher interest rates. U.S. December ISM Manufacturing Purchasing Managers Index, which is also considered business confidence. It rose to 49.3, but under 50 is contraction. It was the strongest level of new orders in 11 months, and production expanded for the first time in 6 months. U.S. weekly initial jobless claims fell to 211,000, the lowest in 8 months. The huge slowdown in immigration is causing a tighter labor force. The tighter labor force brings higher wages and higher inflation, which causes higher interest rates. Wall Street's Dow Jones Industrial Average fell 108 points to 42,732. The good economic growth we've talked about is slowing the interest rate cuts. Also, the high, as in strong U.S. dollar, hurts U.S. company profits that sell overseas when they bring the profits back to the U.S. This is Greg Brown reporting. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.